If you are still an unprofitable trader, it is probably because you don't have a clear understanding of the market structure. If you truly understood the market structure, you would know where and how to position yourself to be on the right side of the market more often. This video will hopefully help you recognize certain patterns, the market prints, and how to use them to your advantage. First, let's understand the way the market moves. The market moves in two ways. We can be in a trending market, which includes an uptrend and a downtrend. And the other market move is the consolidation market. This is where price moves between the same highs and lows. The consolidation market movement usually happens because past liquidity has been exhausted, and the market now awaits and loads liquidity before another explosive move. Therefore, we continue into the next topic, which is the break of structure, which usually happens in trending markets. The bullish market is defined by higher highs and higher lows. The break of structure happens when price breaks the last high, while also maintaining the last low above the previous low. And this process repeats. In the bearish market, we have lower lows and lower highs. In the bearish market, the break of structure happens when price breaks the previous low. If afterwards the price creates a pullback lower than the last high, so it respects the lower low structure, the price is ready to break of structure to the downside in the bearish trend. Here is how the break of structure looks in a bullish market. The impulsive move to the upside market, the high, a retrace, and break of structure. Retrace, break of structure, retrace, break of structure, and so on. And for the bearish break of structure, retrace to the upside, down to break structure, retrace, break of structure, retrace, break of structure, retrace, break of structure, and so on. Another structural market movement is the change of character. The change of character is the flip or reversal of the overall trend. In this bullish, we have the breaks of structure as mentioned before. We clearly observe that we are in an uptrend. Until this point, you should have no problem spotting this pattern. But what if price cannot break the previous high? And instead, it breaks the previous low. The trend has shifted from a bullish market to a bearish market. This is what is called a change of character. And now the breaks of structures are taken from the lows since the trend has flipped. On the bearish market, price keeps breaking structure as we already know. Until it fails to break the last low, and instead it breaks the last high. This is the change of character. And this market has flipped from bearish to bullish, and from now on the market should break structure to the upside. This is how the flip looks like on a chart. We notice on the left side that we are in a bearish trend. The following high was unable to break the last high, and it also managed to break structure to the downside. So here we have our first bearish break of structure. Price continues to go down until it has a retrace forming another high. This high is lower than the last one, and we expect a break of the following structure by price going down. We have another retrace that forms the high that is lower than the last. Swing high and a break of structure below the last swing low. Now we see here that price has managed to break above the last high. This is a good indication that the trend is reversing by a change of character. Price takes a beating down to collect more liquidity, and it shoots upside, breaking the last high. So now we can see that the breaks of structure are flipping. Since the trend has changed, we can clearly see that the retrace's lowest level is higher than the low of the previous swing level that started the uptrend. Now the process repeats but in an uptrend. So retrace, break of structure to the upside. Retrace, break of structure to the upside. As long as it doesn't change character, we can keep looking for buys, rally, retrace, break of structure, rally, retrace, and break of structure. The point of these structural levels is to know what is a smarter decision. On a clear downtrend, I like to sell short the retrace as long as price keeps breaking structure, and I close my sell shorts whenever I see the first bullish change of character. On an uptrend, I usually buy the retraces after price breaks structure, and I look to close my buys at the first bearish chance of character. In the previous example, these are the two positions that could have been executed. You can use most smart money concepts or ICT strategies for entries. The first position is a riskier one. It is based on sell shorting, right after price has broken structure in a downtrend, placing the stop loss above the last local high and take profit of 1 to 2 risk to reward, or at most 1 to 3 on bad setups, but it's best to not take low quality setups. The second setup is a buy long after price has confirmed the uptrend caused by the change of character, and knowing that the higher odds are for price to create a low that doesn't break the last one gives a good opportunity for buys. And we have used the following order block for the position. You can check our last videos where we dive deeper on the order blocks. The reason we should wait for the retrace is because some breaks of structures can be just a liquidity sweep, like in this example. On the left side, here price rallied, retraced, and broke structure to the upside, so it's a normal bullish price action structure. Here again we have the local top and a retrace. The top gets broken again, so nothing out of ordinary for now. But notice after that, at the retrace movement, the price has failed to bounce back up. And instead it changed character. Now the market has flipped into a bearish structure. So it is a better idea to have patience and observe what happens at the retrace. Thank you for watching.